Now let us discuss depreciation 16 mark problem. Problem number 8. Problem number 8. See this Praveen Limited. This problem now. Praveen Limited is a manufacturing concern. It provides this detail. So if you see again, there are three columns: assets, return down value as on 1/4 of the previous year, rate. So furniture, if you see furniture, return down value as on 1/4 of the previous year, that is, will let us assume that 1/4 2020. Return on value is 2 lakh. Rate is given 10%. What about plant and machinery? Return on value is 5 lakh 10,000. Rate is 15%. Truck. Truck is 6 lakh 35,000. Rate is 30%. Land and building 11 lakh 10,000. Rate is 10%. Books, if you see, return down value 80,000, rate 40%. Patent, return down value 12,000, rate is 25%. Yes. So now, if you see this, there are 6 category of assets are given: furniture, plant, truck, land and building, book, patent, and rate is also different. If you see, all the rates are different except for furniture and land and building. Of course, that you need to calculate separately. Even though rate is same 10%, all other rates I am talking about: plant and machinery 15%, truck is 30, see this, book is 40, patent is 25%. So you need to make 6 columns, one particular, and 6 sub columns you need to make. Now after seeing this, there is following assets were purchased during the previous year. See, asset information. Now they have given 4 assets were purchased. One is furniture. Date of purchase is given, date of putting the asset into use is given, cost is given. So now furniture date of purchase is 10/6. That is nothing but June 10 of the previous year. But date of putting into use immediately after one day. That is 12th June. 12th June. Cost is 1 lakh rupee. Plant and machinery date of purchase is 2/10. That is October 2. Then date of putting into use immediately after 6 days. That is 9th October 2020. Cost is 12 lakh 10,000. Truck. Truck date of purchase is 11/05 and date of putting into use is 1/6. So May, in the month of May, truck is purchased, but it is used from the month of June. Cost is 4 lakh 50,000. Book. What about book now? Book purchased in the month of December of previous year, 12/12. But immediately next day it is used, 13/12. Cost is 90,000. So by seeing this 4 items, can anyone tell me? So here whether there are any asset which are less than 180 days in this one? Out of 4 assets, whether any asset is less than 180 days, or do we need to charge half of the depreciation here in this case? See this, whether furniture less than 180 days,
No, no,
furniture is
no,
not
sir.
less than 180 days. Why? Because it is purchased in the month of June. So June means you can approximately you can say 9 months. 9 months, so it is more than 180 days. Plant and machinery. What about plant and machinery? October. What about plant and machinery? Whether it is less than 180 days. Plant and machinery.
Yes, sir.
Yes. Why it is less
Yes,
than
sir.
180 days? Why? Because if you see from October also, if you calculate October, November, December, January, February, March, but in October 8 days is not there. We are only bothered about date of putting into use of an asset. So we need to see this third column. So you can approximately get 175 days. So it is less than 180 days. So here for plant and machinery, we need to charge 50% depreciation. That means half of the depreciation you need to charge for this purchase of plant and machinery. Similarly, what else do we need to do for plant and machinery?
Additional depreciation.
Additional depreciation. So additional depreciation rate is 20%. Again, it is less than 180 days. That is why additional depreciation now reduced by 50%. That means now additional depreciation is only 10% on this purchase of plant and machinery. Now what about truck? This is more than 180 days. Very clear. What about book?
Less than
Less
180
than
days.
180 days. Yes. Less than 180 days. So less than 180 days, half of the depreciation. So now next sale. If you see the sale, three items sold. One is furniture. When furniture sold, date of sale is given, that is 6th August. 6th August, that is 6/8. Sales proceed is 60,000. So again, this date of sale, again no use. So just from the point of view of depreciation calculation, we are not concerned about date of sale. Land and building, 12/12. That is December 12. That is for 12 lakh 50,000. They sold land and building. Plant and machinery, 11/1. That is January 1 of the previous year. They sold plant and machinery 1,30,000. You are required to compute depreciation and written down value. So they have asked you to calculate depreciation. That is nothing but allowable depreciation, you can say, or total depreciation. And next thing, they said only WDV. So WDV, it is assumed that you want WDV after depreciation. Since it is given in the problem WDV, just they have mentioned WDV. So what we are going to do? First, we need to see the format. As per the format, we are going to calculate. So as per the format, we know written down value at the beginning of the previous year plus purchase minus sale, you will get written down value before depreciation. Written down value before depreciation minus depreciation, you will get written down value after depreciation. So we want written down value after depreciation answer to this problem. So now let us see the solution part. See this now. Computation of allowable depreciation answer. Now 6 column you need to make, particular and 6 column. So first column is for furniture, 10%. It is given. Furniture, it is given 10%. As per the question, we need to write plant and machinery. It is 15%. It is also mentioned truck. Truck is 30%. That is given. Land and building 10%. Book 40%. Patent 25%. Similarly, whatever the information given, as per that one by one, you are going to make the column. So now next thing, written down value as on 1/4 of the previous year. So this value is also given in the question. So under each column, you need to write its respective value. So furniture, it is 2 lakh. Plant and machinery, it is 5,10,000. Truck, it is 6,35,000. Where it is given, if you see the question here, written down value, it is mentioned. So from there you can write land and building 11,10,000. Book is 80,000. Patent is 12,000. So we have written down value. Now next thing, add to this. You need to add any addition made during the relevant previous year. So addition is nothing but purchases made during the relevant previous year. So here purchases, if you see, 4 purchases is there. So furniture is 1 lakh, right? So under furniture you need to write 1 lakh. So furniture we have written 1 lakh. Then plant and machinery, there is again purchase, that is 12,10,000. Under plant and machinery 12,10,000. Then truck is there, truck purchased, that is 4,50,000. So under truck 4,50,000. Land and building, no information about purchase. So dash. What about book? Book is 90,000. It is given in the question, book purchase 90,000. So 90,000 you need to write under book. Patent, again it is no information whether it is purchased or not. So that is dash. So now we need to calculate one total, that is written down value as on 1/4 of the previous year plus purchases. You will get the total. You need to add first two information. Total for furniture is 3 lakh. For plant and machinery it is 7 lakh, 17 lakh 20,000. Truck 10 lakh 85,000. Land and building 11 lakh 10,000. Book it is 1 lakh 70,000. Patent it is 12,000. Next sale. We need to see the sale. After that, you need to deduct the sale. Sales is also known as transfers. Transfers made during the relevant previous year. We need to consider transfer made during the relevant previous year. Transfer, here there are 3 transfer, isn't it? 3 transfer is there. So if you see, first is furniture. Furniture is 60,000. Plant and machinery again it is sold, that is 1,30,000. It is under plant and machinery, it is written truck dash no information. Land and building, that is 12,50,000. Book and patent, no information about transfer. Now we want return down value before depreciation. So return down value before depreciation is nothing but return on value at the beginning, add purchase less a sale. So now from this answer you need to deduct sale information. 3 lakh minus 60, you will get 2 lakh 40,000 furniture. Next, plant and machinery. Similarly, 17 lakh 20 minus 1 lakh 30, you will get plant and machinery return on value before depreciation. Truck, since there is no purchase, same answer, 10 lakh for 85,000. What about land and building? Now land and building, if you see, there is no purchase, there is no purchase for land and building, but there is a sale of land and building. So return down value at the beginning of the previous year is 11 lakh 10,000. Now it is sold for 12 lakh 50,000. Can you tell me there is a profit, right? There is a profit in this question. Land and building.
Yes, sir.
Yes, profit. Profit of how much? What is the amount here? Profit.
1,40,000.
1,40,000. 12 lakh 50,000 minus 11 lakh 10,000. Profit is 1,40,000. This profit you need to show as a short term capital gain. So you can write a note. Profit from the sale of land and building, it is considered as short term capital gain. If there is a loss, short term capital loss. That is why here land and building ceases to exist at the time of valuation of depreciation. So nil. Since return on value before depreciation is nil, answer is also nil for land and building. Next, book also there is no sale, direct the same answers, 1,70,000. Patent also no sale, so directly 12,000 you can write. So we have we got the answer till here now. Return on value before depreciation. Now next step is to calculate depreciation as per the rate given. So now first thing you need to tell me, first we need to charge depreciation for purchases. So first we need to see the purchases, then we need to see a remaining balance. Then if there is additional depreciation, that also you can calculate. So in this question we have already discussed now regarding the purchases. So purchases, there are 4 purchases we know. Out of this, how many are more than 180 days? Out of this, can anyone tell me how many purchases are more than 180 days here?
2.
2. That is, one is furniture and second one is truck. Furniture and truck is more than 180 days. So this is, since it is more than 180 days, you can directly calculate the depreciation. You can directly calculate the depreciation on the balance itself. Whatever the balance, return on value before depreciation, there itself you can calculate the depreciation. That is why furniture, since furniture, it is, if you see furniture, it is more than 180 days, it is clearly mentioned. So furniture directly, so what is the return down value of furniture? 2,40,000. So into 10%. Since all the item given in the question to the regarding furniture is more than 180 days, directly we can calculate. Answer is 24,000. 2,40,000 into 10%, 24,000. Similarly, for truck also we know truck is also more than 180 days. So all the item for truck, you can say it is more than 180 days. Balance, beginning and purchases. That is why directly you can calculate truck information also. That is 10 lakh 85,000. 10 lakh 85,000 into 30%. See this? 10 lakh 85,000 into 30%. If you do, you will get 3 lakh 25,500. That is under truck. So what about plant and machinery? Plant and machinery, they have given you the purchases, but it is less than 180 days. That is why this we will calculate separately. Plant and machinery will calculate separately. Then what about book? Book is also less than 180 days. So that is why we need to calculate separately. So one more information, if you see, plant and machinery separate, book separate, land and building is not there. Patent remains now. Patent. If you see the patent, patent also there is no purchase, there is no sale. Directly return on value you can calculate depreciation. So patent is 12,000 into 25%. Directly you can calculate since it is more than 180 days. So patent answer is 3,000. So these three information you can calculate directly. That is why it is calculated first. Furniture, truck and patent. Remaining all column you can put dash. Any doubt, any question? Have you all understood?
Yes, sir. Yes, sir.
Yes, Anand, Anvit, Pragati, Narasimha, Anuj. What about Anuj? Hmm? Anuj, are you there? Anuj, Suraksha, Shravya. Have you all understood?
Yes, sir.
Yes. What about Suraksha and Anuj? I assume that you all have understood. Yes. So let us continue. Uh, yes, we are discussing about this depreciation. First, we have given depreciation for those asset which is more than 180 days directly. Now, next step. Next step, you need to see. You need to charge depreciation for those asset which is less than 180 days. Now, what are those two asset? One is book and one is furniture. So you can either calculate depreciation for sorry, not furniture, it is plant and machinery. Plant and machinery and book is less than 180 days, so you can first calculate plant and machinery or you can first calculate book, any way you want. So let us see. First we have calculated here book purchased in the month of December. That is why now purchase value of book we want. What is the purchase value of book here? Purchase value of book is given 90,000. We know the purchase value 90,000 into 90,000 into book rate. Book rate is 40%. So book rate is also we know into 50%. Why into 50%? Because it is less than 180 days. Since book is purchased in the month of December to March, approximately you can say 120 days. It is less than 180 days. That is why you need to charge half of the depreciation. So 90,000 into 40% into 50%, or else directly 90,000 into 20%. Answer is 18,000. So under book you need to write depreciation. Under book column you need to write depreciation 18,000. Now on remaining book also you need to calculate depreciation. So how to get the remaining balance? Can anyone tell me? Remaining balance of the book. Very simple. How to identify the remaining balance of the book?
Total balance minus the amount already now, just now what we have calculated, sir.
Oh, yes. Yes, Anand. That is the right answer. See this. You can say written down value. Written down value before depreciation. Written down value before depreciation is a total balance, that is 1,70,000 minus purchases. Since we have charged depreciation on purchases, that purchases we need to deduct. So remaining balance of book is now 80,000. 1,70,000 minus purchases 90,000. You will get 80,000 as book balance. See this now. 80,000 is a remaining balance of book. So whether this remaining balance is more than 180 days.
Yes, sir.
Yes, it is more than 180 days. Since it is that balance is given at the beginning of the previous year, it is more than 180 days. That is why 80,000 into 40% directly. So answer is 32,000. So now under book we have written two types of depreciation. One is a purchase which is less than 180 days, and one more thing is the other book, a remaining book. So total depreciation for book is 50,000. Okay, so now book is done. So what else is left now? Plant and machinery. Plant and machinery now we need to charge first for purchase of plant and machinery. See this purchase of plant and machinery 12,10,000 and the date of putting into use is 9/10. So it is less than 180 days. So now next step is for plant and machinery October purchase. See this October purchase of plant. Depreciation plant in the bracket October return value is 12,10,000 into 15%. Since the plant and machinery rate is given in the question 15% into 15% into 50%. 50% why? Less than 180 days. I have written in the bracket less than 180 days. Or else you can also do 12,10,000 into 7.5%. That is also same. So answer is 90,750. So answer is 90,750. Since it is purchase made after 2005-6, we need to charge additional depreciation. So plant is used for manufacturing purpose. So additional depreciation is available for only manufacturing purpose, and especially for plant and machinery. So here additional depreciation rate is 20%. So now additional depreciation we need to calculate. Additional depreciation 12 lakh 10,000 into 20% into 50%. Why into 50%? We are giving the additional depreciation on the purchase of the plant in the relevant previous year. Since the purchase of the plant is less than 180 days, we need to give the additional depreciation half. Half of the additional depreciation we need to give. So 12 lakh 10,000 into 20% into 50%, or else you can do 12 lakh 10,000 into 10%. Answer is 1 lakh 21,000. So now we charge depreciation on purchase. Normal depreciation we have charged. We have charged additional depreciation. Now last thing we need to charge the depreciation on remaining plant. There is a remaining plant as well. So on that we need to charge the additional depreciation. So now let us see remaining plant value. On the remaining plant, how to get the remaining plant? You need to see the written down value before depreciation. See this you have to see written down value before depreciation. Answer under a plant and machinery column. What is the answer? 15 lakh 90,000. So this 15 lakh 90,000 minus purchases. These purchases you need to deduct 12 lakh 10,000. So now if you deduct this, you will get the answer. Remaining plant is 3 lakh 80,000. 3 lakh 80,000 is a remaining plant. So into 15%. Since it is at the beginning of the year, full depreciation. 100% depreciation you need to give. 3 lakh 80,000 into 15% is 57,000. So we have calculated now depreciation for all the 6 category of items. That is furniture, plant and machinery, truck, land and building anyways nil, book and patent. Now next thing we want what? Allowable depreciation. Allowable depreciation we want, that is nothing but written down value before depreciation. After this answer we need to calculate. For furniture, what is the depreciation? 24,000. No other depreciation. So directly under furniture column, under allowable depreciation, you need to write 24,000. What about plant and machinery? Add these three things. 90,750 plus 1,21,000 plus 57,000. So you will get 2,68,750 as allowable depreciation for plant and machinery. Now next you need to see for a truck. Truck is only one item, that is one depreciation, directly normal depreciation 3,25,500. So this 3,25,500 you can give it for truck. If you see here directly 3,25,500 we have written. What about land and building? 10%, it is nil since it is sold and there is a profit. It is a short term capital gain. It is nil. Book. What about book now? Book there is two depreciation, a normal depreciation and depreciation on remaining balance 18,000 plus 32,000, that is 50,000. Next you need to see for patent is only one depreciation 3,000, so directly you can write 3,000. So we calculated allowable depreciation. What is asked in the question? Written down value. Want written down value, they have not specified whether they want the written down value before depreciation or they want written down value after depreciation. So it is better to calculate written down value after depreciation. So what is the formula you can say for to calculate the written down value after depreciation? Written down value before depreciation minus depreciation. You will get written down value after depreciation. So that we see now written down value after depreciation answer. That is nothing but if you see written down value before depreciation is 2,40,000 minus 24,000. Since there is no other depreciation item for furniture, answer is 2,16,000. See this 2,16,000. Now for plant and machinery, written down value before depreciation is 15,90,000. 15,90,000 minus allowable depreciation for plant and machinery, that is 2,68,750. If you minus these two things, you will get written down value after depreciation for plant and machinery 13,21,250. Now next thing is for truck. Truck only one depreciation, so 10,85,000 minus 3,25,500. So that answer you can say 7,59,500. See this written down value of depreciation. Next land and building 10%, that is nil. So anyways, there is no depreciation. Book, now book, if you see 1,70,000, 1,70,000 minus 50,000, 1,70,000 minus 50,000 if you do, you'll get return on value of, after depreciation 1,20,000 to book. Now patent is return on value before depreciation 12,000 minus this 3,000, since no other depreciation. Directly return on value after depreciation is 9,000. So we have calculated allowable depreciation, we have calculated return on value after depreciation. Now one more thing we want is total depreciation. Total depreciation answer we want. So how to get the total depreciation answer? Allowable depreciation total we want. Allowable depreciation total. So 24,000 plus 2,68,750 plus 3,25,500 plus 50,000 plus 3,000. You will get 6,71,250. So this is your total allowable depreciation. So anything you want to